Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, the IMF warns the US on ballooning fiscal burden, as well as that France and Germany swing sharply to the right in EU elections. And finally, Benny Gantz resigns from Israel's government over Gaza. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, make sure to subscribe. The first article we'll talk about is to do with the IMF. Now, the IMF's second in command has now once again urged the USA to deeply consider the growing fiscal burden which the nation is facing. This comes as the official points the US in an optimistic direction by identifying the strong economic growth of the nation that has provided ample room to rein in spending and raise taxes at the same time. Now, this is certainly not the first time that we've spoken about the IMF or noted the current issues to do with the US's debt, as ultimately, as this article goes on to state, the US is basically debt burden is growing and growing year on year, and really the recent economic crisis following of course the 2008 financial crisis, but then of course more recently the COVID-19 lockdown period during 2020 that had its severe economic costs across the world, but also with the US. As well as that, of course, we have the more recent Russian invasion into Ukraine, which has affected other areas of the economy and ultimately has helped push inflation higher, which as a result has affected the US's spending habits as well. And as a result of that, really, long story short of it, really, is that the US's debt burden is growing, and the fiscal burden, the fiscal deficit is of course growing year on year. And what the IMF is warning of is that this is growing and it needs to be fixed, basically. And the kind of things that we've spoken about before with regards to this kind of topic is of course the election which is coming up this year, where Donald Trump and Biden are seemingly going head to head once again, and both of their economic policies have really hinted towards kind of this fiscally loose scenario, and that's kind of what these economists and traders even are worried about, as ultimately it's Biden's spending habits which have proved costly for the US economy, and Trump's kind of willingness to introduce tax cuts or extend the length of the tax cuts already implemented by his previous administration, which is worrying these economists with regards to the fiscal burden, as ultimately both policies look to basically reduce the amount of money coming into the government whilst also increasing the amount of money being spent on people and the government in general, and that's kind of a key worry, of course, because you're growing that debt burden, and most certainly that fiscal deficit is growing as well, and that's a serious issue when of course the US is approaching these all-time highs for the US national debt level, and that's always a serious issue. And just as we've seen recently, or at least within the past few months, we've seen numerous credit agencies around the world downgrade the US's kind of credit rating, just simply because this national debt level to GDP is growing, and that's obviously a serious worry for anyone that's looking to kind of lend out money to the US, and that's why we're now seeing, of course, these economists warn the US of the trajectory that it's on. Ultimately, I think what's interesting though with this article is what the official does say about the kind of path the US can take though, and the more optimistic message which is being spun onto it, which is that basically because we're still seeing this strong economic growth despite a period of really hard times for the world economic wise, ultimately the US really does have that kind of room to make certain economic choices which other nations around the world most certainly can't. So because the US's growth is strong still, despite high interest rates and also kind of inflation which could of course affect consumer spending habits, ultimately that means that the US can raise taxes and rein in spending a bit more during this time, but currently the issue is that neither Joe Biden or Donald Trump is promising to do that, and so that's kind of the key worry for the IMF and other kind of economist agencies. So it'll be interesting to see how things do play out, obviously with the election as both presidents are promising different kind of economic policies. But one thing does seem sure, which is that this fiscal deficit is going to grow, and the US national debt burden as a result is going to grow even larger. And that is particularly worrying during the time that we're in, and especially for the US, which is currently trying to prove itself as the kind of key economy of the world, when of course we have China, the kind of up and coming star of the world, second largest economy of the world, which every single day is growing faster and faster with comparison to the way the US is growing. So whilst the US is growing, it's not growing at the same extent that China is, and therefore, we have to really consider the ways that the US can kind of mitigate the issues which are growing. So with the official also saying that there is now time for other advanced economies to invest in what is being called fiscal consolidation. This would help address the matter of how such nations plan to bring debt burdens down. The warnings by the key official also comes at a time where economists and investors are fearing serious financial irresponsibility by both the Democrats and Republicans. The CBO, for example, expects debt to GDP to soar above previous record highs made back at the end of the Second World War, and that's being expected to, break above that level in 2029, with deficits between 5.2% and 6.3% being expected over the next 10 years. The IMF has also warned that the fiscal deficits of both the US and China pose significant risks to the world economy. Economists are now looking at 2025 as the key crunch year for the US's fiscal outlook. This comes as a result of Trump pledging to make tax cuts and Biden's spending habits, both leading those to believe that the US's deficit will balloon even more. So a very kind of worrying time for the US economy, looking ahead, that is, especially when we're talking about debt and that kind of growing issue. But at the same time, as this economist does note, is that there is kind of a more positive kind of route that can be taken here, a kind of solution which can be pursued, and it's just a question of whether those political leaders will actually listen to such advice and then proceed down that kind of path to achieve, kind of fiscal solvency and that kind of thing. So definitely keep your eyes on this topic, and this article was, of course, very important to note, like always. Next article to talk about, though, is more so focusing on the politics of Europe, with France and Germany, if this can load, with France and Germany now swinging deeply to the right in the latest European Parliament elections. Now, the far-right parties of Europe have now made significant gains in the EU's elections. This comes as such parties have performed well in Germany, whilst also winning the vote in France, and as a result prompting Macron to call a snap parliamentary election. Now, of course, this is a very significant kind of news point to make, just simply because we are, of course, now seeing Macron call, a parliamentary election, a snap election, basically, as a result of this victory. Now, of course, this, election was expected, and the polls were kind of hinting towards this kind of significant gain by the more right-wing parties of Europe. But of course, more recently we've been noting, or at least talking about, the British election, or the US election, which has kind of been more relevant to us in some ways with regards to kind of the economies that we're looking at and the assets that we're trading. But ultimately, I think this is also a very important kind of topic to cover, because of course, Europe, the EU, is also another kind of political entity that we're always kind of looking at. And of course, that relates directly to the Eurozone and the ECB and all the economic decisions which are made within that kind of economic zone. And so as a result of that, I found this was a very important thing to kind of look back at and understand. As of course, each of these parties, each of these groups are going to propose different economic views and policies, and also kind of the geopolitical differences between parties, the kind of geopolitical outlooks between parties also differs, as we've seen with especially the more far right parties within Germany, which actually take a more kind of lax view with Russia, and likewise with those French far-right parties. And that, of course, has an interesting dynamic and is very important to understand when we're then looking at, kind of key assets such as gold, oil, other commodities which are of course affected by war and especially the Russian invasion into Ukraine. So that's why I felt this was still very important to note, despite this being more political than other topics, with projections stating that the more far right-wing parties were to win what was a quarter of the seats in the next parliament, which is up from just a fifth before. The result dramatically hurts the likes of Macron and Olaf Scholz, and the gains are also expected to push the parliament towards a more isolationist and anti-green position, since the biggest losers in the elections were the Greens, who fell 71 seats to 53. The right-wing party led by Marie Le Pen, is expected to have a third of the vote, whilst the centrist party alliance of Macron is expected to only have garnered 15%. In Germany, the Social Democrats led by Olaf Scholz was overtaken by both the right-wing CDU and the far-right AfD. So, of course, a very important article to cover there on, an interesting topic, of course. Lastly, to talk about, though, is once again on that kind of more geopolitics kind of thing to talk about, which of course is the topic of the Middle East with Israel and the war in Gaza. Now, Benny Gantz has now resigned from the Israeli wartime coalition government. This comes as the centrist politician also calls for early elections, with the justification for such a move being based on the accused mishandling of the Israeli war in Gaza by Netanyahu. In his resignation speech, he stated that he had decided to leave the government since Netanyahu had been preventing Israel from moving forward to a true victory. Gantz represents the second biggest, if not the biggest party now in Israel, and he joined the coalition government led by Netanyahu following the October the 7th attack by Hamas. He also made a significant move in backing a push by the US to free the remaining 120 Israeli hostages held in Gaza. The speech also saw Gantz call for an inquiry into the failures surrounding October the 7th. This move by Gantz brings an end to the months of infighting within the wartime coalition government, which saw far-right groups fight with the centrist members over what should be done following October the 7th. A key question which split the government was whether an aggressive policy to eradicate Hamas should be pursued or whether a diplomatic solution should be focused on to enable the release of all remaining hostages. So this is obviously a topic that we've covered greatly recently, and of course this topic has greatly also affected key assets such as oil, which we're always looking at on the charts, and even gold, and that's why we're kind of that's why we keep on coming back to it and kind of staying updated on the topic, as of course this decision especially will greatly affect the kind of volatility within such markets, and probably influence some moves which will take place over this week. So definitely keep your eyes on those such assets, and also keep your eyes on this topic, of course. That's all to talk about in the articles, though. Next to talk about, like always, is the charts, where lots is happening and lots is to note as always. But to begin with, just as usual, we are beginning on the US 30, more broadly talking about US indices as a whole. Now, ending off last week, or actually what's better to say is over the entire course of last week, we really found this bullish retracement to the upside, as of course over the 2 weeks before last, the price of the the kind of Dow Jones had really sold off, swung to the downside as a result of kind of mixed messages from the Fed, particularly hawkish messages from the Fed and certain economic data points which influenced traders to kind of pull back on their positions within the kind of US 30. As a result of that, we saw that sell off over that 2 week period. But as shown on the RSI, price was kind of oversold at that point, and then over the course of last week we really found this kind of upswing in price as price started to retrace back to the upside. A question was always during that time, though, whether this was a retracement or price was now willing to kind of push higher, break above those previous all-time highs, which kept price where it was back around the 20th of May, 17th of May, and whether price was now going to make its way back up to those levels, or in fact was price now going to kind of stay around these levels and possibly even move lower. Now, if we just draw out a Fibonacci retracement tool real quick. we can start to note the key areas which price is currently hovering around. And the kind of key thing to note to start off this week is, of course, that price is interacting and reacting to that kind of key area of liquidity that we've previously noted, which is this level just around here and just below that 50% Fibonacci retracement level, as well as the $39,000 level. But that liquidity level obviously lined up with previous areas of accumulation and distribution, and that's why we noted that out as a key area which price may interact with. And as we can see now, price has reacted to that level and is kind of in the midst of reacting to it actually. And the question will be over the course of this week whether price will completely sell off from this area and continue a move lower, or in fact will price break above this level and make new gains. Next to talk about though is the dollar, which ended off last week with a bang as the over the course really of last week from Monday through to Friday, price just stagnated, stayed around the bottom of the market, stayed around the bottom of this range, which was this kind of area of liquidity and kind of key support level. So price didn't really make much moves from that level up until really Friday of that week, when of course the NFP figure came out, which did show a massive expansion in the number of workers being taken on within the US economy. Whilst the unemployment rate did tick up slightly, ultimately NFP figure was very bullish for the US economy and showed great growth. As a result of that, seemingly traders have now started to price in that reality by now expecting that kind of inflationary pressure to be carried through as a result of the kind of increased numbers of those being employed. And as a result of that, they're expecting the kind of more hawkish monetary policy from the Fed, and that's why we're now seeing this upswing in the dollar. The question will be though over the course of this week whether price will stay above this area of liquidity, which of course price has interacted with twice now recently and sold off from twice. So it will be interesting to see whether price can hold above that area of liquidity, which of course hasn't been seen back on the 30th of May and of course the 24th of May. So definitely keep your eyes on the dollar as some interesting moves are being made. Next to talk about though is the euro, which kind of just reversing the image of the dollar, sold off significantly ending off last Friday. So price did not finally reach that kind of minus 27.2% Fibonacci extension level, which we were kind of looking at price making its way up to, which it was, but obviously that NFP figure kind of ended those gains, and so now we're looking at price possibly even making its way down to this lower level of liquidity that we've previously noted. So keep your eyes on those levels and the new range that will be forming. Next to talk about is pound yen, which kind of ending off last week interacted with that kind of 38.20 Fibonacci retracement level and key liquidity zone once again. So it'll be interesting to see whether we can find some bullish momentum off the back of that move to start off the week, and whether price will now finally push higher and break above those recent highs, which were made kind of on the kind of push into new uncharted territory for pound yen above that kind of 200 yen for a pound level. That's all to talk about on pound yen. Next to talk about is Bitcoin, which as I speak is currently just below the $70,000 a Bitcoin level, but is very, very close to it. And as a result, the NFP figure last week and the dollar gains, Bitcoin did sell off as one would expect. But interestingly, price did kind of really make this kind of bullish move by retracing into that 6180 and key liquidity zone and bouncing out of it, so not staying within that level, and kind of that tells us that price has now kind of retraced and break hooked and goed from this previous bullish flag that was of course formed over the period of end May. So we could definitely now see price continue to the upside off the back of that, but of course we'll have to wait and see depending on the key fundamental news that we're receiving this week, if I can get my words out, which of course includes the likes of the US inflation rate and other key figures. Next to talk about though is gold, which reversing the image of the dollar, obviously because gold is that kind of safe haven asset and the kind of hedge against the dollar. Price swung to the downside on Friday last week, falling from that 50% Fibonacci retracement level, which of course is a very key and significant level when you use that Fibonacci retracement tool. Interestingly though, currently we're sitting at the Fibonacci extension level of minus 27.2, so possibly price will now kind of have that bullish upswing with, you know, price kind of reclaiming those that kind of market inequality made off the back of last week. So that'll be interesting to see whether price can make its way back up to kind of the 2,320 level, which lines up with this key liquidity zone. That's all to talk about on gold though. Lastly to talk about is oil, which is sitting just below the $80 a barrel mark as I speak, but you know, ending off last week did interact with this 38.20 Fibonacci retracement level, but hasn't kind of made a big move off it, so we'll have to wait and see what does happen. That's all to talk about on the charts though. Lastly to talk about is the economic calendar. We're receiving quite a bit of data to note. Now, firstly, we're receiving the Japanese GDP growth rate figure, as well as the British unemployment rate figure, as well as the Chinese and German inflation rate figure. Followed by that, we're receiving the British GDP figure, as well as the US inflation rate figure, and most importantly, the Fed's interest rate decision and press conference. So lots of very important US data this week with that Fed press conference and Fed interest rate decision, but also that inflation rate figure, and that coming out both on the same day will just have such an impact on the market, so make sure you're listening out for that, of course. Followed by that, we're receiving the Aussie unemployment rate figure, as well as the US producer price inflation figure and consumer sentiment figure, and to end off the week we're receiving the Bank of Japan's interest rate decision as well, so that will heavily impact the pound yen gains that we've seen recently. That's all to talk about on the economic calendar though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading week, but that's all from us at Wildwood Capital. I'll see you tomorrow. Bye.